guys, and glad to have you on board again today. Quite some changes, so let's update our weekly scenarios and try to look at the short-term signals we've had to trigger or invalidate these weekly scenarios. So looking at the S&P 500, we have a daily signal closed on yesterday's candle, yet another overload signal. The cycles doesn't align each other because, of course, I still question the reason for us to go that high, but still we're trading with the breakout target area in here. Prices are accelerating, as you can see with these signal on the chart, and we're still trading on top of the resistance context, the trend channel, and the higher time frames context. So definitely into overload area for potential reversals. This is something for experienced guys to trade only, and I don't want other people to try gambling on that. Even though I've also mentioned in the weekly briefing that we are looking for pretty extended areas in which normally we should have a time-based reversal out there in here as well. So the thing is, I doubt this is going to be a hell of a drop. That's what I've argued about the weekly update, saying that there is still a lot of potential supportive areas out there. It's just that the underlying VIX support could create some kind of a vertical drop, like 10% in just a few days. The question is, more importantly, when. We do have a price OK signal in here, which suggests that if prices react, we'll get the confirmation we wanted. So we have the signals, we have the expectable price OK signal to figure out that reversals could turn out to happen if prices react. We're still dealing with very low levels of volatility on the shorter time frames, so it's more about whether we fuck up VIX or we just keep on playing that game for extended period of time. And if we do such a thing until May, like I said into the weekly briefing, I'll have to change my mind about the global scenario for 2021, which for now I still tend to be absolutely impossible, but most importantly this to show up. V-shaped reverse in here is expected as well, so don't be dumb enough to sell on these areas, but don't be too crazy as well trying to buy the dips, okay? But cautiously buying those supports is what needs to be done. As usual, take a list of values you want to do. Don't buy stock indices. Try to buy some good spots and good stocks, okay? Try to let go with the dumb shit, okay? Just try to buy some valuable assets. All right. Then despite that, as we said, VIX, lots of room to the upside, but absolutely no news for now. These daily signals we have on the S&P 500 have no replicate in the VIX at the moment. We closed at the lows yesterday, so big question on whether or not we're going to have, we're closing pretty neutral yesterday without breaking the high points. So either today is going to be the trigger day, or we're going to have to spend a few more days into this area. So don't be too crazy to look at bearishness immediately. But if you want to go down the road of short selling in the shorter time frames, third range boundaries could be a definitely good opportunity. In the S&P 500, 15-minute short time frame has built some kind of a reversal. We do have some signals in here, meaning that the market was lacking of breadth and volatility. These are reversal signals on the high time frames as well, and markets have reversed, broken the support context, holded candle close below, yet we have a bullish moving average. So don't get me wrong, this is not an immediate reverse. We might have retest of some resistances and definitely building third range boundaries. So we've got everything you need in here for a bearish range to set up, meaning that you are able to trade out of 61% Fibonacci. Consider 3940 as an area, the bare minimum to get the fibs, and then you are able to trade inside the context only if you get trending signals out there, okay? So I hope you guys know how to manage trending ranges. Otherwise, get assistance from more experienced traders. Okay, further down the road, problem could be around yields, because yields are raising quite fast, and we might be on the verge to start breaking some trend lines as well. So the question is this something changing pace, or is this just the end of something? I personally bet on the second option, meaning that in here we're probably going to find a resistance within the next few days, which would mean yields consolidating. But what you need to know is that when yields go down, that means people are buying into the contract. So that would be an additional reason for me to think about bearishness to be down the road on stock market, when people would be eventually switching to some less dangerous assets, more of a safe move back into yields as they offer a safe 1.30%. I definitely think that this can turn out to squeeze the stock market for a little for just a few days. Okay, so we'll see about that. Still speculative at the moment. Junk bonds, still looking for a confirmation in here, but same thing goes there, signaled yesterday, so high probability of huge reverse. I'm not going for end of the world territory out there, but just a pullback to some supportive areas could be there. We'll deal with the cryptos later. WTI, still looking for this motherfucker to reverse, and as we can see right now, they do not. No signals on yesterday's session, so WTI still remains a huge question mark for me, because as of November's low point, which is the same cycle we started with the S&P 500, we have gone straight line without single breathe in, breathe out scenarios. This is heavily dangerous, and this is still the major area of concern for my personal portfolio management right now, because I still have a bearish position at these prices, and I really need to think about eventually pulling them off if I end up being proven wrong. The question is just, what the fuck is this thing doing? It's absolutely irrational. We have monthly expirations today. I damn understand that the market wants to close it at the highest possible levels, but I also do not understand what the fuck we're doing here. My plan is to reverse into this area, and my initial plan was to do it in two sets of ways with some kind of a divergence before releasing the energy. We might be doing it the opposite way, meaning like we do it that way first and we're then going to go straight back to the targets. I just don't really care about the underlying price structure. All I need to figure out is what the fuck are we doing out there? So I'm very patient out there. I'm not reinforcing existing positions. I'm just monitoring whatever the fuck happens out there because it feels like the market is just dead bullish. Okay. XAUSD on the opposite end, still looking for potential supportive areas in this context. The question still being, what are we doing out there? Because we have still bullish signals on the trend channels. There could be some bullish signals to trigger in here as well. I'm still looking for potential trend signals to show up. If we do have trend signals on reactivation of the weekly chart time frame, that will be the sign for me to get in. But this is more like a weekly confirmation required. So this is daily chart trending for experienced guys, and trend followers will get to weekly signaled confirmation to get in. So we need to get signals first, and then you need to confirm these throughout the next few weeks. You've got the price okay in here, meaning that this is okay for anticipations. That's more about that. Okay, so standstill for this guy, it's hard to say. If it could eventually go right down to 38% Fibonacci, where we have the moving average cluster, lots of things could turn out to be attracting prices around 1700, an area of interest for me as well if we get down there. Euro dollar, quite a big mess. Good luck if you're trading this one. USD GPY, interesting stuff for experienced traders only. We have the negative moving average. We're trading on top of the resistant context and aligned with the trend channel. We have everything we need to look for early bearish activity. Cycle alignment in here as well. We definitely have everything needed to look for 4-hour chart signals to trigger an entry. Speculative entry, of course, because if you are like me, you must have existing positions from 2020. So don't go too aggressive. Oh, we're actually having a taking profit pattern that is confirmed. Okay, so taking profit could be good enough for us. But that also tells us that we need to be cool with the stop loss because we could have some pushes further down the road. But definitely interesting USD GPY today. Okay, then AUDNZD, very well performing. Yesterday we had kind of a drop and the market reactivated rapidly later on. Still a fairly positive sign for us. I'm definitely having a look at it within the next few days. Are we going to build a resistance and consolidate into this big contraction range, or are we immediately going for the resistant context to break it? I still don't have the answer, but I'm positively orientated for AUDNZD anyway. Okay, Apple. This big boy is under huge pressure because if it drops prices and made candle closes below 125, in my personal opinion, that would be a serious degradation of prices and a signal that we've made final excessive structure in here. And just zoom it out a bit. If this is a final excess, oh shit, Sherlock, there's plenty of shit down the road because this is not going to be a support, this neither, and this neither. So this is straight line down to 80, and that will be hell of a drop as we are right now. So pay attention to these stocks. That was the message sent previously. I'm still speculatively exposed to this market, of course, because it's a crazy bullish stuff. It's just if it falls off the cliff, everyone will have to do the same time, to do the same thing in the same time, which caused kind of a problem, or could be causing some problems with liquidity. Okay. That's it for the stock sector. Let's get into cryptocurrency. Bitcoin back to 51K. Yesterday could have been a little bit of a warning. Everyone just scared out as usual. Volatility generally into the crypto sector, specifically in the altcoins. Bitcoin barely even moved, and people were calling for a crash. Absolutely no signals confirmed, neither in the 4-hour chart or the daily signal. It's really more about this market is exactly doing what I thought it would. It is just pain trading, whoever is trying to go look for the market top, which makes absolutely no sense, because yes, we might be on the verge to terminate a 4-hour trend that could create a daily divergence pattern, which could still be the intermediate maturity, not far away from intermediate maturities of weekly chart time frames. So I see a lot of people scared of pullbacks, but they still have so many time frames supporting prices to the upside. Just like I see people telling, oh man, cryptocurrencies are a hell of a bubble. We're back into the 2018 stuff. These things are supported by absolutely no growth and no demand, where on the same time they feel like they have to buy stocks, which is absolutely crazily stupid, because of course you're talking about buying stuff that are bought for 35 times the benefits, when we are recessing the economy, and on the opposite hand, you're saying that something that has a safe haven demand, limited supply, and demand for future growth is basically a bubble. So I don't really get it, but still, that's a topic for another day. So lots of clusters into this area. That's the things we've talked about. So we can still keep on pushing on this Bitcoin without further ado. It can, of course, reverse in here as well. We do have early signals of exhaustion, but still, prices are pushing up and we have no other signals. This taking profit pattern has been triggered out there, so we're pretty far away from here. So at that point, waiting for at least a daily closed signal to figure out that something might be on the verge to reverse. Otherwise, in my personal opinion, we're going to get to this 53K looking for milestones like the $1 trillion market cap. Ethereum is following, of course, because if you have a look at ATH-BTC, you'll see that we are trading upon supportive areas. We've broken this head and shoulder structure, meaning that we're back into the neckline pullback, and I still tend to believe that there is an upside move to come on Ethereum versus Bitcoin, though Bitcoin can go up, sure can, but Ethereum can't go down within the same period of time because of ETH-BTC. Then there is a big question mark surrounding all major altcoins, Stellar, Ripple, Cardano, and so on. And the Bitcoin dominance, therefore, is trading around this trend line. My big concern personally is that I see absolutely no reason to pay for it. Cycles are certainly not ready to pay for a trend channel. So in my personal opinion, breaking through it is what's down the corner. The question still being, what's the appropriate time frame for this? That's not necessarily today or tomorrow. We're looking at weekly chart time frames. So it mostly depends on what these guys are doing, okay? And if I have a look at that, then, well, on my personal opinion, this isn't bearish at all. Just look at that. We're breaking resistant context. We're changing pace. The momentum is accelerating. We're holding candle closes on top of the resistant context. I see absolutely no reasons for this market to collapse, to be honest. They could still do it. Of course they could. But in my personal stance, these things are just Ethereum-like. They have much more reasonable chances to keep pushing up and looking for all-time highs and breaking resistances. They have overlapping structure and all the things suggesting this could be a FOMO type of wave in which we look for breaking resistances. So next resistances are intermediate levels in here. In my personal opinion, the next true resistance is the all-time high. Question is, are we going to manage ourselves out there? Still remains a big question at that point. What I would see in the shorter time frame is that this trend channel we were dealing with, we're still barely retracing 50%. And the last time we did, we triggered an algorithmic detection pattern with a signal on the trend channel. Damn it, that's not bearish. So I'm not raging for bearishness, but at that point, as long as this holds on, I still see the possibility to oscillate in here and eventually push further up later on. So I'm not in a rush for these things to go bullish, but let me be real clear, okay? The trend channel is in here, so if we're bullish, then this is our next target. Okay, the question is, are we going to go straight line with a stupid bullish move, or are we going to go grinding our way up slowly but steadily? Until then, I'm not bearish on these things. Same thing for Cardano. This guy is hell of a bullish stance. It made some pullbacks, yes it did, but it definitely looks more like a trend rather than a bubble. We had some pullbacks and people are immediately buying into this. There is volume supporting those lower shadow candles, so we see some breathing. It's definitely not like the usual good old parabolic skimming shit in which we go straight line. This is not what the price is doing. Look at all these comes and goes. This is not a parabolic skimming shit. This is oscillating way more than it did back then with the bubble stuff. Same thing for stellar lumens, man. Look at that. This is not a parabolic skimming shit like it was back then. This could have been, yes, definitely was, but it actually have been entirely retraced. So we got back to the previous resistances. The price discovery, or not price discovery, but the price action is fairly different from previous bubble structure, and people yet tend to believe that these things are bubbles. I can't get it. Okay, so that's pretty much all about it. Bitcoin dominance mostly depends on major altcoins reactions over the trend channels. I can hardly say what's going to happen, but until further notice, I remain positively tainted. Pretty much all about it. See you guys later.